Hi traders, Anthony here. What I want to do with this video is a couple of things. Firstly, I want it to be a tutorial on support and resistance. And secondly, it'll be my Bitcoin technical analysis for the day. But more importantly, I want to dive into how we can see the market and plan our trade around key levels of support and resistance. This is the video that I wish I had access to when I first started trading. And I'm doing the video from that point of view. I'd been trading for a while and I'd been throwing around this idea of support and resistance, and I'd been hearing the term support and resistance, and I understood that it was about looking at a chart and there's support, there's resistance, 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 resistance. We call these levels support and resistance, but what are they? What is support and resistance? Why is it support and resistance? Well, the market trades to these levels and sometimes it gets rejected, so we call it support and resistance. When I finally discovered what that actually meant, it was a game changer for me. It changed my understanding of the markets and how the markets work, and it was an important turning point in my trading career. So with that, here's my take on support and resistance, and at the same time this will be a relevant video as far as where Bitcoin is trading at the moment and where we might look for an opportunity here to get involved. As I mentioned, we pulled a line through here and we can see that we've traded into a big level of resistance. What I'd like to do is isolate this down here. This is on a daily chart, and let's pick up this section of the chart, bump up the shade on that. Let's just convert it to yellow. That'll do. When we look left, we can see that that's an important level. Okay, we traded up to it here, resistance, we rejected. We traded through it here. Here we traded down to it, it acted as support. We can see here that it acted as support. We broke through resistance, etc. Here as well, and then rejected here. So we have this support level. Let's go down to the lower time frame and just have a look at this. So what we've got here is a level on the chart from which this move originated. So we have this impulsive move here, this impulse leg, and it kicked off down here. So we'll go down to maybe a 4 hour. All right, so now we can see that the market consolidated through this level prior to this impulse leg. Down to the 1 hour. Okay, so we get a bit closer to the action. Here it is. But there's something specific about this price action through here that we could look at. So a 30-minute, I guess we could look at it from a 30-minute perspective here. So we know that this is a big level of support through here because it's been traded to previously. It consolidated and it was the level prior to this move. What's going on in here is bigger players in the market need to fill their quota. If they're wanting to buy, they want to go long, for example, they can't just jump in here and decide to enter the market. Well, we're going to go long, let's go, and they open a long with a few million dollars and away they go. They have to work this level and build their position. They have to accumulate. But think of it this way, they've got a massive amount of capital and they can't just jump in here and decide to buy. So this level gets worked, and to be able to move the amount of capital that they have, they need liquidity. So if they want to buy, they need sellers, they need sell orders. So they're going to create that. First off, this is shorting here. So there are sellers in the market. Okay, so buyers can come in here and tap into sell side liquidity. So with people shorting the market, there's a build-up of liquidity above in the form of stop losses. Market trades down and pretty well immediately spikes up into liquidity. All of these stop losses get taken out, and immediately after this it spikes down, more of the same. Now we have this range forming. Okay, so these stops are being soaked up, are being taken out. We had this range forming, and what we have above and below the range is a liquidity pool. Okay, so the market spikes up again, wipes out these stops, and then immediately attacks the other side. It's being whipped back and forth here, above and below the range, attacking liquidity. Travels up again, does the same thing here, back down again, whips down under, and then trades off. This is something that's fairly common. You're going to see, if I could just clear all that. And I mean, you know, people talk about chart patterns. We've got head and shoulders, this, that, and we've got, ascending and descending triangles and God knows what. I think this pattern here is the most important of all, and we don't see this being taught in retail. We're all familiar with the head and shoulders and whatnot. So we have this double bottom and then a break of this low here, back down, retest. If anything, try to remember this chart pattern. I could extend that, and it breaks. We're looking for a reversal. We see this double bottom more or less here, and then the market come back down and wipe out stops. Regard this as a fake out as well. Okay, people shorting from here. Okay, you think that this is now heading south. They all jump on board, and then the market turns around, comes back down for another dip, and then it trades off. So wherever you see this double bottom shaping up, be prepared, especially when you see the opposite. So look at the range, above and below the range. We've got this grab for liquidity, and then we dip down further, and then we trade off. That's a really important pattern, price action pattern. What would you call it? Who knows? I don't know. The smart money reversal pattern, something like that. So we need to be able to recognize what's going on here and make sure that you don't get caught up in the manipulation and subsequently being taken out or wiped out of the market. So what we want to look for is the market inviting us in, and it's going to be in the form of finally, and we had a break here. It's going to be the break, retest, and I want another break, retest of this high. So coming back to support and resistance, at these levels where big players build their positions occur over and over again. If we go back out, we zoom back out again. Let's go back out to the daily, for example. Okay, keep in mind when we go to the daily, we're going to see a candle, but what's been going on is this accumulation or distribution phase or consolidation phase, if you want. Then when we look left, just back that off a bit, and we see where the market has traded into this level. This is a daily. Keep in mind, if you went down to the lower time frame, you're going to see this chart pattern playing out around these levels here, right here, here, under here, etc. Resistance, resistance, resistance. Big players plan their trades around these levels. They plan their trades around these levels. So when they're working this level here, they know that this is a key level of resistance up here. They're planning their trades. So what happens is when they accumulate, same time they set up in here at this level, they set up sell orders. So what we have is a build-up of sell orders in the order book, resting limit orders, okay, resting at this level. The bigger the level insofar as where it's had multiple business, multiple interactions where the market's retested the level, the most likely there's going to be obviously a stronger level of support or resistance. In other words, there's going to be a large number of sell orders resting right here. Market trades up and it doesn't have enough buying momentum here to push through. These guys basically taking profit and unloading, right? Resting sell orders. So we get our level of resistance and the retrace. Same thing the other way around. I also trade the futures markets, and what we have access to is, in the futures markets, we have access to order flow data on the chart. So we can see real orders that are actually in the order books on the chart, and what you'll see is you might see the shade of yellow, and then sometimes it'll overlap with some orange, and then there'll be a stronger level over here. This might be red. So you'll see these varying sort of shades of yellow, orange, red, etc. All right, and so if you see a stronger color here or a heavier shade, it could be like a lighter shade of gray where they overlap the orders and there's an accumulation of orders. You'll see, like you can see here, there's actual orders resting on the chart. You can see them. So we don't have access to this data in the Forex or the crypto markets, trading on our exchanges, Binance or TradingView. We don't have that data. So we can't see where there's resting orders on the chart here. We might have a depth of market to the right of the chart where we can see the orders. Okay, so we need to understand where there's most likely going to be resting orders in the market at these levels. So we can only guess, really. We come in here and we can see that this is a level of resistance. Goes back and it's been tested a few times. So we then assume that this is a level, but we can't actually see how many orders are accumulating in through this level. We can only assume. So we can come up here and go, well, this looks like a big level. I would say that that's definitely a resistance. We could set our target and what have you, and most likely that's going to be the case. So all we can really do is look back and have a look at these levels and see how many times the market rejected at the level, and then we can only assume that that's going to be a significant level there. So that's pretty good data. So we can plan our trades around that. There's the concept of order flow and resting liquidity in the markets. Bigger players plan their trades around these levels, and it's generally going to be the daily, the weekly, and the monthly key levels. So on the daily chart, we can look back, we can see here that this was a level. We can flick a line through here and we can assume, okay, we've got a daily level of support resistance right here. Okay, that's fine. Now we can go out of the chart to the weekly and the monthly, and we can do the same. There's two indicators that I live by, or the two types of information that I need is I need to be able to measure the volatility in the market, and I want to see levels where business is being done, traded volume. So there's the two most important types of information I need as a trader is volatility and traded volume. And it comes back to traded volume, for example, being these levels where the market consolidated and there's accumulation of these levels running across. You get a heavier level here of traded volume and volatility. If I had a choice of only two indicators out of every retail indicator available today, and there's quite a lot, if I had a choice of two, in fact, if I had a choice of one, it would be the average true range. Next on the list is volume profile. Traded volume, that's what I'm talking about, traded volume. So with that, what I've done is I've had my indicators developed, and let's just have a look at traded volume. So what we have here, this is the trend bar. We call it trend bars, but it's got a lot of stuff in here. This picks up accumulation and distribution levels. It looks left, it picks them up and extends them to the right if we want to do that. And we can make this grey shade more intense or less. We can adjust that. So traded volume. So what this is doing, if I take that out and let's just bump this up, what this does is it's looking for key levels where the market has traded from. It's looking at the range. Okay, this is a daily chart, so it's going to pick up the range prior to this move, for example. And if we went down to the lower time frame, we're going to see down here, we're going to see our range. Okay, so this is okay. So there's our trading range prior to the move. This is what we need. We need that. So my indicator here looks back and it finds the trading range on the daily chart on all time frames. If we extend that, tick this checkbox. Let's just leave it overwhelmingly over the top bright. See, you got different shades of this grey. Some of it is a lot lighter than others, and then we've got these dark patches or darker patches, right? This is absolutely crucial information, and what it does, it goes back and you can see that it picks up these levels, these historical levels here, well, from back here, and then it picks up this range and it overlaps so that you can see the overlap of the grey. Every time it passes through the same level, the grey becomes lighter, and so we get this build-up of where the market has done business previously. It's picked it up here, through here, and then we get these lighter and darker shades. Let's just back them off a little bit and see how we can use this. So that's one thing. So we can see where smart money pretty much has been working the market, accumulation and distribution zones. Down here we can see that it's traded down. Look at that light color down here, support, and the market will tend to trade through this thin liquidity where we see these darker areas as a price gap, thin liquidity until we hit our level, and then we see the market rejecting because there's a build-up of sell orders resting right here, resistance. So this is going to pick up on every time frame. It'll go back a certain amount of candles and it'll project the data forward so that we can see what we're trading. So we want to be trading away from support and resistance. Market retraced. There's an opportunity when we see it rotating, and we can see that on the lower time frame, the market rotating. We've actually got alerts that tell us when it's trading out of, it's rotating out of like a retrace here. So we can time it perfectly, and take the opportunity, get involved, and then there's a buy. And we're trading away from support here into a gap. Where's our target going to be? Right there. Trades up. Okay, so we have that. And then if we go down to the lower time frames, it pulls it across on the lower time frames as well. So whenever you're looking for a trade opportunity, always come out to the daily chart to start with and get a handle on the key levels. So then the next thing, we need to know the daily, weekly and monthly key levels of support and resistance. So if we go down to a 1 hour chart, for example, the shades are going to be slightly different on here because it's only going back so many candles. And of course it's going to go back a lot more candles on the daily, but you need to map it out on the daily. And I mean, look, if you wanted to, just very quickly, we can do that. We can go back out. Well, we're going to plan a trade here. We're looking for a trade opportunity, so let's do that. So out on the daily, I'm going to come back here and I'm going to mark this through here as the key level here that we've traded under. So this now on the lower time frame will be resistance. If we break this level, retest and fail, that's a short. So this here we can see, and we can see the shade. So this is where the shaded area starts. So why don't we just call that a daily key level on the daily time frame, level D, done. We're on the daily chart. You can see this candle body. I go for the candle bodies more than anything, but I'm going with the shaded area. And then down here we have this level through here. All right, so we can pick up this shaded zone, and then we'll see that on the 1 hour chart. So the shades are going to be different. So what we're doing is we're looking for this gap, possible short here to trade to the downside through this gap. Okay, so we'll just mark that as a daily, level dailies. Now we've got this marked down, we can go down to our lower time frames, and we've got a map. We have a road map. Right, there's a high. We can see the shaded area here, up through here. So we could mark that out if we want to. Okay, so we'll go down to, let's go down to an hourly chart now and have a look at it from that perspective. Here we are, you see. So we know that this is a gap on the higher time frame. On the lower time frame, it's a bit more busy and it's picking up a bit more data, but we can see how it gets pretty thin through here. And on the daily, we can see that it's pretty thin. So know that smart money is looking for the daily levels more than anything to plan their trades. So this is going to be the level of interest. But what we can do is on the lower time frame, we can look at these levels here for targets. So first level, we could come down to this lighter shade, the tops of these. That can be target 1, for example, if we're looking to short this. Target 2, and then target 3, target 4, target 5 if you want to. So we can do that. So what we're going to do now is bring on the trend channel, support and resistance. And the other thing I mentioned was volatility. Let's just back off the shaded so we can see what's going on. Drop those back a little bit. But we can still see them, but we want to get a view of the candles, and then we've got this other trend thing going on here, the bluish shaded zone. We can still see our shaded levels here. They go beyond this cloud. Okay, so we can see all that. It's got to get used to looking at the data that's on here. Okay, so there could be a short lining up here. Could be. Coming back to key levels of support and resistance, what we've got here is these yellow lines here, 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 yellow levels, the horizontal levels. So this is pulling data from a bit further back. These are daily levels. There's even one here. So you want to consider that. This orange level is a weekly level. There's a daily level here. So keep an eye out and have a look and see these levels. So with that in mind, if we're looking to short this, let's say, you know, we're looking for an opportunity and we decide to jump on this if we get a retest and fail. Okay, so let's say retest, fail here, and we decide to short it. Have a look left. Okay, there's a daily. Let's just pull a line through. See the green dots? Kind of comes into confluence with the daily level here. So we've got another daily level here. Okay, so what we can do is we can just pull these across and plan a trade. We've got these two lines here and it coincides with our dotted level D that we pulled through. So we've got this little range through here. So we're using the information that's clearly laid out on this chart to give us our targets. Look down here, see the shaded zone, and look at this. We've got a daily level here, so there's another level. And then we've got this weekly level down here. So what we have here is a roadmap, a clear roadmap. Now, if you were trading this, you would then look for, after you've taken 80%, so we always do our 80% early, level 1, target 2, target 3. You could come above the levels. You know, you could just set your target slightly above them. Let's do that. So slightly above the level, that's going to be your target. What have we got? So we're going to come down to here, there's a level here. This line, this is all part of it. It's all deliberately calculated. Come in above there, there's another level. So there's your target, you know, 2, 3, 4, however many targets you want. But know that the market is most likely, if it's going to do anything, it'll interact around these levels, maybe trade through, maybe hold and rotate, who knows. All right, so that's really important that we understand these levels and use them. Support and resistance. There you go, that's what it is. Guys, I think I'll wrap up the video. It's been quite a long video. Head over to my website and jump on board with us. If you go to the store link, you'll see down here the 12-month option. Take the 7-day free trial. You won't be billed today if you click this PayPal. Billing starts in 7 days, and you can, if for whatever reason it's not for you, you control it in your PayPal. You can do that if you want to. Bitcoin and Skrill as well. Give it a shot, guys. Try it for 7 days and you might surprise yourself. With that, I hope you have a great day. Safe trading. See you in the next video.